Hey everyone, we are 24 hours out from the big planning intentions report that comes out tomorrow at 11. And so let's just review where we are, what's happening in the market, and what we want to do with our positions. Most of you know that we're bearish longer term. We think that supplies are going to become burdensome, and I'm going to go over that balance sheet with you and what we're seeing right now here so you can have it in your mind. Okay, so for the planning intentions report, the only numbers that really matter are this column. This is the area planted. This is what the USDA is going to give us their first estimate, which is based off of farmer surveys. So the lowest estimate that we can find that's out there is 87.67 million acres. The highest is 92, although I think there is one that's 93, but that's pretty far out there. I think you'll get the point at 92. If it's 93, it's even worse. And then the neutral case, or the average, is 90.88 million acres of corn, which is up from 88.6 a year ago. Now, here's the problem we have with corn, is that if you hold everything else constant on these balance sheets and apply trendline yields across the board, you can see what happens to our carryouts. It grows significantly, and our stocks to use ratios become too burdensome. And so we are bearish corn longer term unless and until something radically changes one of these numbers. That could be yield going up, that could be that could be demand going up, that could be yield going down, that could be acreage going down. Something here has to give in order to put us back into a really tight market. Otherwise, with normal weather, normal acreage, and steady demand, we are going to grow our carryouts, which is bearish. Now, there's a lot of talk in the market about our stocks being too tight, because that also comes out tomorrow, which is the quarterly stocks report. Now, as far as corn goes, there's a lot of people thinking, hey, these stocks are going to be tighter than what we had originally planned. And where that flows through ultimately is onto this line in the balance sheet, which is the beginning stocks, okay? Now that you're going to have something like 7.5 billion bushels of available corn. And that's a big number, but what that does is change last year's carryout. So if we have more stocks than we thought, then this number grows and this number grows, which raises this number as well. If we have less stocks than we originally thought, then this number shrinks and this number shrinks as well, okay? So there's two numbers in play tomorrow. It's this number and it's these numbers right here. Our view is both are bearish, and even if we lose, let's say, 400 million bushels off of stocks, something crazy, and we're way more bullish, and that's a really bullish number, and I think analysts would say, my gosh, we're going to send things to the moon. Well, even if that happens, if we plant this many acres, our carryout still grows to 2.2 billion bushels. Like, it takes something more. It takes demand or yield destruction in order to hurt this thing moving forward. So we're going to maintain that bearish bias. Now, beans, same thing. 88.24 is the trade average guess. 87.35 is the lowest, and 89.62 is the highest that we found. Any one of those numbers increases our carryout, holding all things constant and using trendline yield. So our forecast right now is showing burdensome supplies on both corn and beans, which does not bode well for an acreage battle, because what could end up happening is these things have to race to give up acres rather than buy acres from the other one. And again, like corn, the number that everyone thinks is going to be bullish is this one right here, which is going to increase. They think that this number is too high. They think we're going to decrease the beginning stocks, which would decrease the carryout. And beans, certainly, if this number is significantly lower, then that could get beans excited, but then that could result in more acres here. So I don't think we're going to look at a massively bullish report tomorrow, but it could happen. We were reading this morning, 15 out of the last 20 years, there's been a bullish reaction to the stocks intention report. And I don't know if that's bullish because it needed new acres, or if it was bullish because for the majority of the last 15 years, we've been at or below the cost of production, and we just needed to incite a rally in order to ensure supply got planted. All right, here's what the charts look like. This is March corn, and I'm going to walk through March, July, and Dece for you so you can see it. Here's March. You can see we've got a little bit of a red candle working today. This is where the most bullish activity is happening because it's the tightest in the front. So what we did the other day is we sold the March puts that we had been, or May puts that we had been in, and as a hedge against new crop. We thought that would fall faster than new crop. That didn't work. So we came out of those at a break even. And today we are rolling those to July. Let me put that in here so you can see it. Here's the same setup for July. You can notice it's just a little bit weaker chart. We've failed to come back up above any of this other support. And we seem to be rolling over, and we're below our hedge line. We're below the 200-day. We're below the 61.8% retracement. We're below the clouds. We're just below anything that would tell us to be have a buy signal. So on 50% of our 2023 production, we are buying July at the money 630 puts. That is to complete the roll from the May puts that we started here the other day. And then we are looking at December, selling 50% of our production in futures against the December contracts. And we will come out of those if we get a big bullish report, and we need to, because we're coming, let's say we're coming back up above 583, or we're coming back up above and into our daily clouds. We'll make some adjustments if those things happen. But for now, I think hedged is where you want to be because of the burdensome nature of those stocks moving forward. Okay, soybeans. Pretty much the same thing in soybeans. Although we've recommended no action in beans at all, we recommend just being hedged. So old crop beans, definitely the most bullish of the complex, but still not really doing a whole lot to get us overly excited. We're below the 61.8. We're below our daily cloud, and we do seem to be right at the current moment. We're working a small reversal alpha new highs here today, so that could mark the end of that. Certainly understand the bullishness behind old crop beans because of the tightness that we've seen, but that does not last forever. And I think that if we were really running out of beans, we'd be trading up in here. We'd have taken these highs out. The market's smart, and if it needed to ration, it would be doing it already and wouldn't be waiting for a report. So our bias is lower. New crop, even weaker. We haven't even hit the 38.2 retracement level, have not been able to break through it. It's going to take a lot more bullish action here in order to get us excited about new crop beans. So our recommendation is just stay hedged in whatever position you're in. And if you're short futures, we're short futures from kind of up in here. If you're in the put spread where you have a short call at $15 and a long 1340 put, you got a lot of room, and it's going to have to go up a long way for you to get hurt on that position. And if we do get higher prices, yay, we'll rejoice in that. Okay, wheat. Wheat is the least affected by tomorrow's reports. Acreage is kind of a known thing. Stocks, we do get a report there, but I don't think the trade's looking for anything real spectacular in wheat. We did have the big update yesterday on news out of Russia. We had have the big reversal that we got that we closed with. We're right back inside our daily cloud. I do not think this is a bullish setup at all. I'm not going to sell it today because we're a little bit worried about just the volatility that could come from the report tomorrow. But certainly, if all things hold consistent and we don't get a big bullish number on corn tomorrow, then I think we're going to be selling wheat below this daily cloud, because we think the downside is continuing to grow in the wheat market as well. So I hope that's helpful. I hope that helps clarify exactly what it is we're looking for and what we're looking to do. If you have questions, please call us. Check your emails and texts, because we will be following up in those formats too, so you can have them quickly available. And otherwise, remember, there's risk trading futures and options, and you should only do so in light of your own financial condition. We'll talk to you later.